Have you been working hard in your business but never paying yourself for your hard work? Let's change that. Hey, I'm Gina LeBlanc from Paper and Spark, and I help makers and artists like you start and scale online shops so you can achieve your entrepreneurial dreams and hit your financial goals with ease. By the end, you'll know exactly how to pay yourself out of your business without any fear of breaking the rules or doing it wrong. Make sure to stick around to hear my recommended method for paying yourself consistently. I'm an accountant that's worked with e-commerce sellers for over 8 years now, and something I've learned over this time, lots of us online shop owners are not paying ourselves. Reasons for not paying yourself may range from not having enough left over in profit from your business, being scared to take anything out of your business, you want to reinvest it all back into your shop, or maybe you're just not sure exactly what the correct way to pay yourself is. Give me a like if you're not paying yourself consistently and you want to be paying yourself consistently. So let's clear these things up. How exactly are you allowed to pay yourself? I'll tackle this question from the perspective of a sole proprietorship or a single member LLC that's taxed as a sole prop. That applies to about 90% of online business owners and probably you if you're watching this video here in the US. But keep in mind that if your business entity is something different rules might apply to you. Now, I always recommend having a separate business bank account for your shop. Separating your business funds from your personal funds is just good business sense, and it creates a cleaner paper trail for doing your books and in the rare event you're ever audited. But having your business money separate from your personal money means that you have to make a dedicated effort to pay yourself from time to time. So let's talk about how to actually pay yourself. Is there a right or a wrong way? Are there tax rules related to how much or how little you pay yourself? Turns out, no. If you're a sole proprietor, there really aren't actually any rules as to how you pay yourself. There's not one correct way you must do it. You can withdraw cash from the ATM. You can do an online transfer from your business bank account to your personal bank account. You can write yourself a check from your business bank account. You can keep some extra cash in your pocket at the end of your in-person event or craft show. You can pay yourself the same amount every week or every month. You can pay yourself different amounts inconsistently at different time periods on different days. I start to feel a little bit like Dr. Seuss talking about where you can eat green eggs and ham, but you get the picture. The only thing that I do not recommend when it comes to paying yourself is paying personal bills or personal expenses directly from your business bank account. Technically, I do want to say if you're a sole prop without an LLC registration, that is actually okay. It's legal to do that. But if you do have your LLC registration for your business, mixing personal and business in the same pot is really a big no-no that could end up putting your liability protection that you get with that LLC registration in danger. So don't do it. So that's why I'd say whether you are an LLC or not, I really wouldn't recommend doing this. Pretty easy to take that one extra step of transferring the money out of your business bank account into your personal bank account and then paying your personal bills from there instead. And you definitely want to take that extra step if you do have your LLC registration. So now that you know you can pretty much pay yourself as a sole proprietor however you want, whatever is easiest for you, how do you record paying yourself in your books? And does it actually affect your taxes in any way? It may sound weird, but paying yourself is not a business expense. For accounting purposes, it's considered what we call an owner's draw. You don't get to subtract your owner draws as an expense on your books or on your taxes. It actually doesn't even get reported anywhere on your Schedule C tax return. I won't dive too deep into that, but as a sole prop, suffice to say that you're always taxed on your business's net income, which remember is your sales minus your expenses. And also remember, those expenses don't include your owner draws, what you're paying yourself as a sole prop. So if your shop made $70K in sales this year, and then you spent $40K in expenses running your shop, you have a net income of $30K, right? You'll report $30K on your income taxes and you potentially pay income tax on that net amount of $30K. Whether you paid yourself $1 out of the $30,000 and transferred $1 out from your business bank account to your personal bank account, or whether you paid yourself $29,000 of the $30K net income and transfer $29K out of your business bank account, either way, it makes no impact on your tax situation. You will not pay more or less depending on what you paid yourself. You will not pay more or less based on what's left in the business, what you chose to reinvest versus what you chose to draw out. All that matters is that net income. The IRS doesn't care how much of your net income you did or did not pay yourself. So now that you know that, I want to encourage you to pay yourself. Why should you pay yourself? I know sometimes it's tempting, especially in your first few years of running your business, to reinvest all of your profit back into your shop. Making some money to support yourself for your hard work really helps prevent burnout in your business, though. We all need some incentive for the work that we do, especially the longer we've been doing it. Also, you'll learn to see that your business won't fall apart if you don't keep every penny you make back inside your business bank account. You'll learn to run your business leaner and wiser. Setting a plan in advance will make you more likely to actually follow through with paying yourself. The fewer decisions involved in the process and the more you can make this a system without emotion, without decision making, the more likely you are to follow through. Let's talk about 3 different actual methods or systems for paying yourself. We're going to talk about 1, setting up an automatic transfer, 2, using a set percentage of sales, or 3, coming up with a minimum balance threshold. I'll chat about each one briefly. Setting up an automatic transfer. You could set up a recurring automated transfer in your business bank account to transfer, say, $100 every Monday to your personal bank account, or $1,000 on the first of every month to your personal bank account. Whatever set amount you approve. This method makes it completely set it and forget it, and you get paid the same amount consistently. It's a lot like having a dependable paycheck from a regular day job coming in. That method also means that your business must net, meaning sales minus expenses, at least whatever the transfer amount you've decided is. If it doesn't, the transfer won't go through, or you might end up with a negative bank account balance. So it kind of forces you to run your business in a way where you'll always make enough, or maybe not spend too much, right, to meet that minimum requirement so you can make those payments to yourself. It also means that hopefully you're checking in on your finances and your bank account balance frequently to make sure that the money is there. 2, the set percentage method. You could choose, for example, to transfer 15% of all sales to your personal bank account on the 1st and 15th of the month. You'd need to manually do this process by logging into your bank account, adding up all of your sales during that time period, or maybe adding up all of your credits to your bank account during that time period, and then transferring 15% of that total to your personal bank account. This is the concept made popular by the book Profit First by Mike Michalowicz, and it's the one that I personally recommend as well. Utilizing this method literally means paying yourself first. Notice I took a percentage of my sales, not my net profit, not after my expenses have come out, but my sales. That means I pay myself truly first, and whatever is left over in the bank account after that goes towards running my shop and running my business, which means paying those expenses. If there's not enough left over after I pay myself, I still paid myself what I needed. I'm going to have to cut back somewhere else on the business side of things. So it makes me the first priority in the business. The amount that I get paid each month might vary because it's a percentage of sales, but as long as I'm making sales, I'm getting paid. This method also has that same benefit of making me pay attention to my numbers and my books and my bank account balance. I've used this method for years in my own business, and you can check out my other video, how I set up my Profit First transfers each month, here, if you want to get a behind the scenes peek at how I actually literally follow this process every week. So like I said, this is my preferred method. Do you agree? Let me know in the comments. And my third and final method is the threshold method. This one is a very rough version of paying yourself. It's very simple. Oftentimes the easiest one to do if you're kind of easing into the process of paying yourself for the first time. In this method, you would choose a minimum balance for your business bank account. And anytime you get over that minimum balance, you would pay yourself the overage. So let's say, for example, I choose $3,000 as my minimum threshold. I'm going to check my business bank account balance on the first of every month, and any amount in there over $3,000, I'm going to transfer to my personal bank account, and I'm going to rinse and repeat that process every month. So you choose whatever minimum balance you felt comfortable with needing to leave behind as cushion in your business and pay yourself the overage every time period. You may do that once a month, once a week, whatever feels good to you. This method doesn't really help you rein in your spending in any way, since you're essentially paying yourself last, unlike the other method. And you may not have the minimum balance in your bank account sometimes or all the times. You may be growing up to that minimum balance. But hopefully it still helps you get in the habit of paying yourself without it feeling too scary. You still get to have money left over in your business, which is better than not paying yourself at all. The bottom line is that I highly recommend choosing a method, writing it down, making a plan, making alerts and alarms and reminders on your calendar to remind yourself to check in with your system or make the transfers or whatever you need to do. Plan out some concrete defined method or system for paying yourself, because that way you will hopefully do it. The number one reason most handmade sellers quit is because they aren't making any money. Too many of us are not paying ourselves at all, or we're at least definitely not paying ourselves what we deserve. Make it a priority to pay yourself for your time and your talent so you don't get burnt out. Willy-nilly is not the way to go with your money. Now that I've given you a few ideas for how to actually pay yourself and hopefully cleared up the rules behind paying yourself, I'd love for you to share. Will you use one of these methods, or are you already using another method? Let me know what you think about paying yourself in the comments. If paying yourself from your profit is a priority, then I'm guessing that increasing that profit so that you can pay yourself more is a must on your list. Watch my video 4 easy hacks to increase your shop sales that don't require more traffic here next.